Welcome to Versus, where two Advus advisors debate a financial topic. Today's debate is ETF or mutual fund.
So, Jeff, we are arguing for ETFs versus mutual funds today. So I'd say the primary argument for mutual funds is how they price. So at the end of every trading day, mutual funds are priced once a day at what's called net asset value, or NAV. And what that does is take the price of the mutual fund and make sure it represents the value of the underlying assets. During very volatile times, especially during 2020, this was a problem. ETFs, because they trade intraday, there can be a lot of selling pressure to where they create dislocations between the price of the ETF such that the price of the ETF doesn't accurately reflect the assets underneath, if that makes sense. So essentially, they're not priced perfectly. Those dislocations can be very uncomfortable for investors. You know, your investments aren't actually showing, the price of your investment isn't showing what it's actually worth. The other argument would just be that the universe of mutual funds is much larger just because they've been around for longer. There's more of them. So creating a more bespoke, customized portfolio for yourself that reflects your own unique, risk preferences, investment preferences. It's just a lot easier to do with mutual funds because there's more of them out there.
Perfect. I think those are good arguments for mutual funds. Appreciate you letting me take ETFs. It really comes down to three things. One, they're cheaper. Two, more flexible. And three, just more tax efficient as well. So the cheaper side, a lot of times it's next to nothing in terms of 3 basis points on the expense ratio. Number two, the flexibility piece. That comes down to a little bit what you touched on, the intraday trading. While that could be a problem in extreme circumstances, a lot of times it's a huge benefit not having to wait for that end of day NAV to make a trade and get in and out of positions based on your strategy. And then number three, that tax efficient piece, you're not kind of beholden to fund managers, whether they not want to pass along certain gains to you from a tax perspective. That could be a problem, especially for someone with a more passive approach. But at the end of the day, I think both of them clearly have a place in someone's portfolio, and they're just wrappers like on a present. Could make it look different, have different features, but you're still getting that same present you want at the end of the day.
I would agree. Great analogy.
Nice.